we talked about earnings. You know, the stock market's up, had a rate of return of about 120% since the bottom, March of '09. By the way, that was when everybody wanted to get out, March of '09. You heard people say this. They'd say, you know what, I'm going to get out of stocks, I'm going to cash out my 401k, and when the economy gets better, I'll get back in. Oh, yeah. The stock market is a leading economic indicator, so if you're waiting for Katie Couric to come out and go, whoa, there's jobs everywhere, you're going to pay about 30,000 on the Dow. That's just not the way it goes. So this is corporate earnings here. This is corporate earnings. You can see they've grown very steadily since the mid-1950s. In fact, very, very steadily. If you look at it, there's been times of expansions, recessions, but it's basically hugged that line. And if you go all the way over here, two interesting points. This downturn right here, that's the end of the world. That's the end of '08. Doesn't look like the end of the world in this particular chart, but that's corporate earnings in '08, and that Avery Dennison sticker that I put up at the top, the round ball, is corporate earnings for 2011. S&P earnings are at record levels. They were $95 a share. This year in 2012, we're estimating $102. No, corporations have never done better than they're doing right now. Corporate earnings aren't good, they're not great, they're phenomenal. And that's why this market is up 120% from the bottom, because that's really what ultimately counts. Energy prices, we have an energy studies program at Tulane, so I was getting some estimates out of them. First of all, we think oil prices will remain stubbornly high. We really think, you may have seen a short-term peak. I think the prices are going to be right around $100 a barrel for about the average-wise. You'll have higher and lower, but average-wise over the next 18 months. We think $100 a barrel is actually kind of a Goldilocks scenario, and the reason is that at $100 a barrel, some good things happen. One is you can spur domestic drilling, because if you can't make money at $100 a barrel, you got to be doing something else, you know. And then we got to do that, because our current plan of sending trillions of dollars to countries that want to kill us, I do not think is a good plan. I was not at that meeting, but I would have raised my hand. I think that would have been, oh, in the back. Then it's also good for alternative fuels, even though when you talk to green people, say sometimes, not like Kermit the Frog, I mean like environmental people, you know, sometimes you'll hear them say, I hope oil goes to zero. Well, that's actually not in their best interest. Having oil at about $100 a barrel is in their best interest, because it allows solar and wind and everything to compete on a playing field for research dollars and all. So they're actually better off there. And third is $100 a barrel isn't so high as to derail the recovery. Demand in North America and Europe, the traditional markets, is really pretty flat. The increase in demand is coming from the emerging nations, such as China and India, and that's not going to go away. It's only going to go up. You're not going to get the genie back in the bottle on this one. It's not like next week a bunch of Chinese guys come out and go, oh, really missed my bike. You know, it's not going to happen. It's not going to happen. Just not going to happen. And it's, I can say that because I am Caucasian. I'm Asian, I'm Caucasian. It's kind of a division of the same thing, but it's, and I think this is, you, Boomy, you use that tonight. Now, on the supply side, we have two completely different animals on our hands right now. On the oil side, it is still very difficult to find big reservoirs or elephant finds of oil. There's a lot of hope in the Bakken, but at this point, really, the elephant finds that remaining are really in the deep waters of the Gulf of Mexico, about 50 to 100 miles south of New Orleans, where we had the big spill a couple of years ago. And you remember 2 years ago, everybody was glued to their computers watching that oil spew out of the bottom of the ocean, and experts looking at that said that well was flowing at a rate of about 60,000 barrels a day. But the one thing I don't think they were factoring in is, you know, the camera puts 10,000 barrels on you. It really does. So it might not have been quite that high, but it's and so that remaining oil is very difficult to get. You know, you guys we're all just preaching to the choir, but you can go around other parts of the country, they think the oil industry is still like the Clampetts, you know, shooting for some food and up from the ground, come up and crude. Yeah, the way they're finding it now is pretty amazing. I have a friend that, you know, for instance, the deep water, they're drilling in 5,000 feet of water and then 30,000 feet into the earth. So that's 35,000 feet. That's about what you fly a commercial aircraft at. So next time you're in the window seat, look out and go, yeah, I could hit that. You know, it's this is pretty amazing. I have a friend at Chevron. He says the way they explain those deep water wells to non-engineers, and I'm not an engineer, is they say it's like trying to fly a plane over New York City and trying to hit the pitcher's mound at Yankee Stadium with a tool the size of a coffee can at $100 million a pop in the dark. So it kind of gives you some perspective. That guy's a good friend of mine, but he's not my best friend. And I think you know the difference between a good friend and a best friend. A good friend will help you move a sofa. A best friend will help you move a body. Isn't that true? That is always, let's face it, that is always. I grew up in an Italian family that was always said at dinner. And there was, you know, Italians don't like a bunch of Jehovah's Witnesses, right? We don't like any witnesses. Let's see. Now that I've offended the Jehovah's Witnesses in the crowd, there's a, hello, Watchtower. Let's see. So if we look at that, but on the gas side, of course, is a very, very different picture. It is really just stunning what's happened in terms of some of the new ways they've been able to bring gas in. We've got gas down to $2 an MCF, which is, of course, very good for you guys, very bad for natural gas producers, but also creating a lot of opportunities for more plants in Louisiana. I mean, we have the lowest feedstock costs around. They're cheaper than they are internationally. You know, you might not know this about natural gas, but it's $2 an MCF here. It's $10 in Europe, and it's $17 in Japan. So it really is a U.S., a North American kind of function, and they're finding it everywhere. You know, the Haynesville field up in Shreveport is now the largest gas field in America. The Marcellus field between Pennsylvania and New York. My favorite is the Barnett Shale field, which is exactly directly underneath the Dallas-Fort Worth Airport, which I think is hysterical. And it's and so when you fly in at night, you see these neon poles about a mile from the airport, and those are natural gas rigs drilling horizontally right under the terminal. So you know, you're waiting for your flight, and it's like, what's that? Nothing. You know, that's what Delta stands for. It doesn't ever leave the airport, you know. So it's, let's see. Well, there's Jed. And of course, our real problem is not finding oil and gas. There are more oil rigs searching for oil right now in the United States than they have in the last 25 years. So that's not the problem. The real problem is on the refinery side, and the three things you keep hearing are NIMBY, not in my backyard, banana, build absolutely nothing anywhere near anything, and nope, not on planet Earth. So it's, this is not getting better, but this is the bottleneck. It's not the oil itself. Gas, we've become the Saudi Arabia of natural gas. The biggest story in America over the last 50 years, and nobody's reporting it, is that our prayers have been answered. The United States is energy independent now, and I never thought it would feel so crummy. It is just amazing. It has happened. It has happened. Now we've got to build the infrastructure. We've got to use more natural gas. But it's incredible. Historically, a barrel of oil has sold, it produces about 6 times the BTUs as an MCF of natural gas. That's just kind of the ratio. So historically, the price of a barrel of oil has been about 6 times what an MCF of gas has been. Today, the ratio isn't 6 to 1. It's 50 to 1. 50 to 1. It's incredible. Clean burning, cheap relative to oil. The real opposition to natural gas, by the way, of course, is not the oil companies, because they're the same companies. You'd have to be kind of really schizo to be doing that. But it's really the coal industry that feels very, very challenged by this. And that's why when you're watching a ball game, you see ads for the coal industry now, you know, and you're like, yeah, Marge, pick us up a bin of coal. That's a good idea, you know, like, and they're advertising clean coal, which a lot of people think is an oxymoron. You know, it's like jumbo shrimp or Humble, Texas, or the Dodge Ram. There's let's see. There's people wonder, are we going to go into a double dip? We're not going into a double dip. There's 3 things you need to see to be facing a double dip recession, and none of them are in the cards right now. The first thing is housing starts. They need to be high but falling, and they're not. They're low and flat. Next is average weekly hours worked. That needs to be high but falling, and it's not. It's high and rising. You know, it still might be kind of tough to get a new job in the United States, but if you're working, you're being asked to work more and more hours. And so that number 2 is not true at all. And the third is the inverted yield curve. In other words, what we would need to see is short-term rates higher than long-term rates to show us we're going into recession. We're just not seeing it. In fact, this is what it looks like. Right now, the 10-year Treasury is at about 2 1/4. The 3-month Treasury bill is like 0.05. It's like not worth calculating. But so the difference, 225 minus 0.05 is 220. So the yield curve is not negative, which was what would signal a recession. It's positive by 220 basis points. That is a pretty fat slope. And I'll show you why it's been so great. Look at 2001. We had an inverted yield curve. It led to that recession. We got another inverted yield curve in 2007, led to the recession of 2008. It's been a great, great indicator, but people don't use it. Instead, we usually send a reporter to a Walmart in Gonzales somewhere, right? And ask people coming out like, you scared of losing your job? You think the economy's bad? Like, that's right, I'm scared, real scared, you know. Back to you, Bob. People are scared. This is ludicrous, what we're doing. Oh, my God. And no matter what Walmart you go into in the world, it's always the same. That greeter guy, the old guy in the blue vest, comes up to you and he always goes, so how you doing? I always want to say, isn't it obvious? I'm at Walmart. You know, it's Jesus. Things are good. I'd be at Nordstrom's or Macy's. You know, it's this is the economy, and you can see what happened. I'm getting a lot of exercise here. This is all starting to work out for me here. My whole family's trying to get fit. A couple of years ago, my mother-in-law started walking 2 miles a day, and now we don't know where the hell she is. It's kind of working out, really. This is GDP. You can see we fell off a cliff in 08. And when we fell off a cliff, I was on panels with a lot of economists, and everybody said we'd make a recovery. I mean, there was no question. Most people said we'd see a tepid recovery. The term you heard a lot was a U-shaped recovery. I was on a panel once with a guy that said it was going to be a bathtub-shaped recovery, which I guess was like that. But it wasn't any of those things. It was exactly what we didn't think would happen. We had a V-shaped recovery. We came back very, very quickly, and we've been positive ever since. And we're growing at about 2.5%. The last quarter, we grew at about 2.2%. But if you broke down the numbers, it's better than that, because the private sector grew at 2.8%, which means government was shrinking. That's exactly what you want. That's exactly what you want, but nobody seems to herald the good things that are actually occurring. I think the economy's getting stronger, and I think a couple of things are going to happen. One is housing seems to be bottoming, and I'm going to tell you why I think that. I get a lot of numbers and everything, but I'll give you a good example. I run a program at Tulane called Birkenroad Reports. I started it 19 years ago, where we have 200 students every year. I assign them, put them into teams of 5, and I assign them each to one of 40 small cap companies from Texas, Louisiana, Mississippi, Alabama, Georgia, and Florida. And we go see the CEOs and the CFOs. We visit the company sites. We have the best field trips in the free world. We take helicopters to offshore oil rigs. We go to steel mills. We go to chicken processing plants. If you've never been to a chicken processing plant, do take the family. That is a terrific outing. And one of the companies we follow is Iberia Bank, and Iberia Bank's been been a big national success story. It started out in Lafayette, and now they've expanded to Texas, Arkansas. Well, they did things really right. And they didn't go into Florida, and everybody else got clobbered in Florida when housing fell apart. But what they have been doing is, as the FDIC closes banks, they've been buying them from them. So they now have 48 branches in Florida, despite the fact it's all from the FDIC. And when you buy them from the FDIC, it's a pretty good deal. They've thrown out all the bad bet loans, the questionable loans. You just got to get your banner up on Monday, you know. And 2 weeks ago, they bought a bank in Florida, and I think that signaled to me the bottom. These are very smart people, and obviously what they're saying is, I want to get bigger in Florida, which is the worst housing market in the country, and I don't think the FDIC is going to be calling anymore, so I'm going to have to go out and start buying them. So I think that was a really positive signal.